Hey guys, welcome back to Stock Tricks with Nick. This week had 394 Q4 earnings calls, more coronavirus numbers being reported, and a new possible tax plan that could boost the market even more. So let's get right to it. At first glance, it looked like SHAK investors did their homework, as they reported an earnings beat and positive guidance. But inside selling brought the stock down 8.3% on Tuesday. What do the Golden State Warriors and Under Armour have in common? Without Chef Curry cooking in the kitchen, they both dropped through the floor. For the Warriors, they've won 48% less games compared to last year, and for the stock, they're down 19%. Lyft investors had their positions dropped off in the wrong direction, down 17.1% from pre-earnings close. If Shopify's earnings isn't a red flag to America's shopping addiction, then I don't know what is. The stock's up 30% from the beginning of the year and 15.5% after their earnings. Denny's and MGM, two places that I'll definitely be going next week, both tanked after their earnings. Denny's is down 4.8% and MGM down 5.5% after their CEO stepped down and their earnings fell short. But seriously, if you don't start a Vegas morning at a BYOB Denny's, then you're not doing Vegas right. Goodyear reportedly had a bad year, dropping 12.4% on Tuesday. Investors dumped Waste Management stock after their earnings per share were garbage, but then realized the next day that there's always going to be trash to take care of and bought the stock price right back up. This has been steadily increasing all year, up 10.3% year to date. Roku's earnings were wild and made me glad that I exited my straddle position a couple weeks ago. The stock was up as much as 8.7% to $151, but then drastically fell throughout the day, ending the day down 6.3%. Canopy Growth stocks lit up on Friday after their earnings. The stock got as high as 22.4% up before investors decided to chill out, man, during lunch, then lit up again in the afternoon. On Thursday, it was reported that the death toll from the coronavirus breached 1,300 people, with 64,000 people infected. But could these numbers be even higher than what's being reported? Missouri Republican Josh Hawley called out the Chinese government, saying that they haven't been honest with us. They are completely overwhelmed at this point, and they're not leveling with anyone, especially us. So far, the markets have decided that the disease is nothing to worry about, as the stocks have been rising after the initial drop. According to CNBC, the Trump administration is working on a new tax plan that allows Americans to invest more on a tax-free basis. In the same article, it mentions that a household with an income of $200,000 can invest up to $10,000 tax-free. But then, it says that the money that you'd put into these accounts would be on an after-tax basis, and when you go to pull the money out, it'll be taxed as well. But any profits you make during the time frame will be tax-free. So let's see how this plays out before we make any moves. Let's jump to the E-Trade platform to take a look at some stocks that I've already traded, and one that I'm looking forward to trade. First we have Tesla, and I bought a 700 strike put and sold a 685 strike put that expires on 2/21 for $465. I started this position on Monday when the stock opened higher, seeming to break out of the squeezing channel, but couldn't hold its steam. I was able to profit from a trade from the top of the candle in my Robinhood account, and figured the stock was reacting as typical parabolic moves do. We had the first drop, and the bulls were in denial. Then it bounced off a low of 687 and ran all the way to $820. This fulfilled the return to normal stage of the move. The price was then pinned at $800 on Friday for option purposes. When I say pinned, it refers to the theory that stocks that trade with high option volumes tend to stay around large round numbers on Friday, so that sellers of the options can profit the most from the price. Now I think we're headed towards the next step down, the fear. Before Tesla bulls roast me, I know that Tesla is different than Tulip Mania and that their products are incredibly useful. But when you have the top Google result being, should I invest in Tesla stock, you know things have gotten out of hand. The only problem with my position is that I expected the move to happen quicker, and with my options expiring next Friday, I don't know if I'll have enough time to cash in on the move, especially with the markets being closed on Monday for President's Day. But we'll see how this goes. Next, we have AYX, and I found this stock from the trending list on StockTwits. I noticed it was up big on the day and on the year, and then I zoomed out to get a better understanding of the chart, and what did I see? A perfect cup and handle. That's a chart pattern when the stock drops from a high, levels off, and eventually meets that high again. That's the cup. Then, as investors sell to take some profits, it dips down, comes back up. That's the handle. The next move is usually a clean breakout to new highs, which is exactly what we saw. Ideally, I would have gotten out right with the break at $148, but I didn't see the stock until $157.75. Still, with a large green candle and on high volume, I think this move still has steam. And finally, we have Shake Shack. And I currently don't have a position in this trade yet, but it's just a matter of time for it to break out. The first thing that caught my eye is this large gap from the Q3 earnings on 11.5. Remember that eventually most of these gaps in the chart fill, so as the stock started running up towards it, I started paying attention. My first test with these moves is whether the stock has broken above the high price of the initial drop day, which you can see it has. So now I'm looking at this chart and noticing that the price has been getting up to a certain point, but being rejected each time. And wouldn't you know it, that's right where the 200-day simple moving average is. We even saw the initial run-up fail to break over this metric as well. It's true that some of the high of the days have been over the 200-day moving average, but not a single day has closed above it. That actually shows that the stock's not ready for those prices and pulled back. So I'll take this trade when the stock closes above the 200-day moving average, with the goal of running to the low the day before the earnings call, which is around $83. I'm staying patient on this trade because of how clear the resistance point has been, but it can be a big winner if it moves as I expect. Thanks for tuning in to Stock Tricks with Nick. I know recently my account's been being busted, but at least in the last week, I can say that I stuck to my rules. If you enjoyed this video, please like and subscribe to my channel, where I make videos on market recaps and personal finance tips. In the description below, I link my trading journal, my stock twits, and my Twitter accounts, so give those a follow. I'm calling my shot now. Week 10, I'm breaking out of this trading slump. See you next week.